So smart money intent since the 12th of May. So pretty much I had a few updates in my Telegram group. So some of you might see that. So these are all the selling bars. So pretty much this is just a big bearish bar of the resistance. So that's very clear right here. So you can definitely tell there's quite a lot of the selling of the peak of the resistance. So I think the main point is that from this supply absorption potentially, so that's previously as a potential supply absorption trading range, we can definitely see that supply has been decreasing from the volume. So that means, and it's holding up very well. So we got a uptrend, sign of strength rally, followed by a possible supply absorption. However, the selling of the resistance kind of give me a bit of the worry because for the supply absorption to be sustainable, we eventually still need to see the commitment above. So it's crucial to see the S&P 500 still need to break out and commit above, followed by a continuation to the upside. So if there is not enough aggressive volume to come in to buy it up, so purely just rely on the supply absorption means that there is accumulation near the support. So accumulation on the way down, accumulation near the support at about 4100 or 4080. So might not be important because that could really trigger the failure case, which I mentioned is a break below the support, and also eventually you need to commit below the the demand zone at about 4050. So another update that's more testing of the demand zone, that's right after the breakdown. So we definitely got this. Okay, so this is the trading range from here. So this is the hourly chart, and this is the daily chart. So you can see that there is a breakdown on Thursday. So it happened, it's just probably I think on the last 2 hours. Finally, the support right at the 4080 just cannot hold anymore, and eventually we just see it fall through the support, and that comes with an increasing of the volume. But if you compare the volume, it's not that aggressive. So eventually we still can see that kind of supply is decreasing. So let me just point you the some of the important points. So more testing of the demand zone can be expected. So I just label the demand zone. So that's the demand zone. And there's a failure of the supply absorption at the trading range. So we already see the failure on Thursday. So that is the break below. I think the background is very important. So presence of the value buying on the way down in May, and also and a trading range between here 4080 and this 4200 is just suggests that it's sort of this is a failure of lagging of the aggressive buying rather than there is a intense selling into the strength. So I think that should be quite an important point, which I will explain in detail. And also the bear market leading indicator, if you still recall, I used the Russell 2000 as a benchmark for leading the way down. It's still kind of showing outperformance at the moment, so it really did not lead the ways down. It's sort of like acting as a non-confirmation for the bear market leading indicator, but that's certainly another point. I'm not going to talk much in this indicator about the Russell, but certainly I will just go through a lot of the details with this aggressive buying versus the selling pressure of the resistance. And eventually, I still don't think that's the capitulation that's I think everyone anticipate will come anytime soon. So let me explain you shortly. So we still have a bullish case, means that we still need to see a lot more testing for the demand zone. Okay, so let's put up the chart right here. Okay, let's go to the S&P 500. Okay, so before I dive into the trading range between 4080 to about 4200, let me just point you out the accumulation on the way down. So this is the low on the 12th of May. So the 12th of May, we have a low right here. So that certainly is, there's a demand right here. And that comes with quite a lot of the volume, high volume, and also this 2 bar as well. Okay, so there is high volume here as well. And also on this test day, so there's a test bar right here. So maybe let me use the highlighter to highlight for you. So that is where we see there's a lot of the absorption and also accumulation. So this 4 bar, so 1, 2, 3, 4, the 4 bars right here, so correspond to very high volume. And also, although this is a test, still it comes with relatively high volume, although it's sort of decreasing if we compare it. So that's kind of decreasing. Okay, so these 4 bars just show that there is a lot of the buying on the way down. So that certainly is a value buying, because when those funds, they see the value, they will just come in and buy it up. And the following rally, let me choose orange. Okay, so the following rally, okay, comes with decreasing of the volume. So I talked about the ease of movement before, because of the previous accumulation or supply absorption right below. So it's quite normal to see that there is lower volume on the way up. So there's an ease of movement. It's not surprising or unusual. However, there's one key thing here, means that so far we only see there's value buying. So on the way down means that there's a lot of the buying on the way down, because I see the value as spotted right here on this 4 bars. And when it's going up, we didn't really see aggressive demand to push a price up, as reflected in the volume. So lower volume, and also from this few bar as well, also lower volume. So there's no aggressive demand right here. So only the supply absorption volume or the accumulation volume on the way down as called the value buying. So that's how I actually mark this value zone, the green box. So pretty much just based on these few bars, I can just mark up this is the value zone with the previous demand zone, where there is a lot of the demand come in, because they see that there's value out there, so they just come in and buy it up. Okay, so this is the value zone and it's established. So no aggressive buying on the way up, as reflected on these 2 rally. So lower volume, another lower volume. And also, we can definitely see that if we compare using the Wyckoff's law of the efforts versus results, certainly that shows us that there's presence of the demand. So if we see that there is increasing of the volume, so there's increasing of the volume on definitely this bar, and also on this 2 bar here, increasing of the volume, but certainly there's minimal downward results. Okay, and also this bar as well, the test bar. So there's minimal downward results. So that's the effort versus results. So there's an increasing of the effort behind trying to push the price down on these few bars. But what we are getting here is a demand tail. So I think it's very clear. So you can just spot it or using hammer concept. If you are familiar with, then I think that's fine as well. So, but the theory behind it is that there is an effort versus results, showing that there is absorption of the supply behind that. So after that, what happened is supply absorption. And I think it's clear that when we see the first 2 bar right here, so there's increasing of the volume in these 2 bars right here. So these 2 bar actually have increasing of the supply. So kind of similar to here, maybe slightly lower, but there's kind of a lot of the supply, certainly more than the up wave. So you can see there's an increasing of the volume, and also right here as well, increasing of the volume. So that's definitely the increasing of the supply. But what is the results? So let me use the hourly chart. Okay, so from the hourly chart, you can see that there's the trading range that I'm talking about. So there's the trading range right here. So 4080 and also 4100. So that is the support. And also previously in the Telegram group, I also marked down the selling bar. So let me mark this here again. So definitely there is selling of the, sorry, let me use the highlighter. So there is a selling of the peak of the resistance. So there's a selling, there is also the selling right here. So there's a breaking out, uptrust, selling. So there is more selling here, and then eventually there is another selling here as well. So that all become obvious is right at this. Oh, that's okay. Right at this resistance zone. So there's selling off the resistance zone, and that certainly doesn't look too bullish. However, it doesn't really form a threatening view like to flip it to the bearish view because of the selling. Because for the supply absorption to become valid, to be sustainable, we still have the potential supply absorption scenario. So where we have quite a lot of the buying near the support. So there's buying near the support, so we can see that buying near the support, buying near the support with a volume. So that's all the evidence of the value buying. So just like the previous swing low, like the 3800 to 3950. So there's a lot of the buying on the way down. So rather than have the aggressive volume to push the price up. So that's why we see this kind of the behavior. So selling off the peak, and its lack of the aggressive volume to push a price up and initiate the breakout. That caused a problem. So I think it's obvious on this day. So if you look at on Thursday, so there is 1, 2, 3, 4, 5 bars, 5 hourly bars. So attempt to hold at the support about 40.80, and eventually this bar just break down and break below and followed by a continuation to the downside once it trigger the breakdown bar, breakdown zone at about 40.80. So eventually we have another follow through bar, have a clean break of 40.50. So suddenly there's another level right here, and then eventually just close right at the low. Okay, so that's how the whole selling started. So pretty much in short is the lack of the aggressive buying or lack of the aggressive demand that caused the breakdown. So that's why if you understand this, previously there's a lot of the value buying on the way down, as I marked within the value zone right here. So the green box is the value zone. So, and there is another value buying right here, but eventually it just failed. So that's why we see that on Thursday and Friday, the volume is not that aggressive. So there's no aggressive supply to come in, and it actually have a lot of the ease of movement to the downside. So that's how this wholesaling happened. So if we just look at the daily chart again, so since we already know that this wholesaling is actually started with the reason of there's lacking of the aggressive demand to push the price up. So eventually we see there's a ease of movement to the downside. So although it's still have an increasing of the supply, localized increase if we compare to the trading range, but if we compare to the previous reaction, this reaction, look at this, it still have the decreasing of the supply. But comparing to the spread to the downside and also velocity to the downside, that's kind of super bearish. Okay, so in terms of the velocity to the downside, I think is probably the worst that we have ever seen out from this. Okay, so that is certainly the bearish characteristics. But in terms of the supply, it still have the decreasing of the supply. So it's kind of well, and also the close probably is very severe, and maybe slightly better than this. Maybe I think it's the same. So this bar is also closed below 3900. So on Friday we see that S&P 500 closed at 3900. Yeah, it's 3900. So on this day, 19th of May, the close is at 38.97. So I think probably it's close right at the low at this bar. So if you compare to the previous bar, there's a bit of the demand tail, demand. There is just lack of demand, so no demand. Okay, because of the bearish sentiment, and also a lot of the pessimism around. So by knowing that at the moment there is only value buying on the way down rather than aggressive demand buy on the way up, so it's kind of lagging off the momentum behind. So that's why we see that every time we see the rally, it's kind of stall right at this resistance zone, okay, or this exit zone, where you see that the previous support now become the resistance. So it's just a natural place for the price to stop right there, because lacking off the aggressive demand. So now, without the aggressive demand, and if we have slight increase of the supply like this on Thursday and Friday, slight increase of the supply, we can easily see that the price getting pushed down with ease of movement, bearish spread to the downside. Okay, so right now, I don't really see the evidence of aggressive selling, especially selling into strength into this portion. And also I see that there is a lot of the value buying on the way down, as reflected as I showed you earlier on. And right now, the price or S&P 500 is still testing this demand zone. Okay, so 3800 to 3950 is the demand zone, and it just need to test, and until these value buyers, the value hunters coming out, and to support the price, to stop the price from falling further and turning up again. So that's the background behind the selling, or how I interpret the S&P 500 sell off. Because until Wednesday, so that's the apex formation right here, is still looking generally bullish, with the bias of supply absorption breaking out to the upside. But Thursday pretty much just confirmed that it's going down with the commitment to the downside, and breaking below and reverse this commitment bar. Okay, so the 4050 is from this commitment bar, so we can see there's a close below the commitment bar right here. Okay, so it's a clear reversal. So right now, I think for the bullish case, what we can anticipate is more testing ahead of this demand zone. So if we can just sort of still keep testing, maybe spring it, because I think right now the sentiment is just way too bearish. So I wouldn't be surprised if it just break below 3800, and if it can spring it, means that it can just come in above, and also push all the way up and start another rally, at least tested 42 and to about 41, so this trading range into this area. And that means there is still some demand behind, and there is still some buying on the way up, and there is not enough supply to push it down. So this is what I would like to see. So short term, for the bullish case, what we can expect is still a trading range, because if this is a change of character or change of behavior, so certainly we are still within a big trading range. And because I don't really see that there is aggressive selling, so like what we are having probably right here, we also see that there's increasing of the selling. So if we just want to compare this, so maybe this, quite a few level. So this is the trading range. And some might argue that, well, isn't it an uptrust of the distribution, or at least an uptrust? Yes, of course, this is an uptrust of this previous swing high, and there's no doubt. And similar to this, so there is a uptrust after the distribution. So we got a uptrust followed by a test, and then eventually coming down. But look at this, so we got a increasing of the selling, and also especially within this previous demand zone right here. So selling is excessively high. Okay, so while it is just bumped into the previous demand zone, so look at this portion. So there's an increasing of the volume and a lot of the fighting between the bulls and the bears, and eventually we can definitely see that there is a failure, so a breakdown right here, and then eventually just go down. So at the moment, we are sort of in a similar situation, but the background is slightly different, so which I already explained. So right now, we definitely want to see that the interaction within this demand zone. Okay, so how we actually interact, whether there is sort of the churning volume or inability to rally up like this. So there's the inability to rally. So talking about the bull case, we can anticipate more testing, and eventually if we can settle with another structure, then there's still possibility for it to go up. Okay, however, if we really can't attract aggressive demand or the value buyers, value demand, um, value buying coming in right at this demand zone, what we can expect is probably a break followed by inability to rally, something like this, and eventually it could just tank below. So that should back to the analog of 2008, which I talked about this maybe in 4 or 5 weeks ago. So that should be the capitulation that we can anticipate. But for now, I still believe that there should attract some kind of the buying right here because of the previous explanation that I just showed you about the buying on the way down, and also failure of the supply absorption because of the lacking of the aggressive buying. All right. So now we know that there is a possible bull case and the bear case. So as a trader, I think it's essential that we just trade accordingly. So just like how did it happen right here. So if it breaks down, breaks below, then certainly immediate trend is just going down. So short term is still going down until we see that there is kind of a reversal. So it's just need to pay attention to how you actually interact at probably 3850 to about 3800, whether it's a spring or whether it's a failure and then tank. That's a capitulation mode. So if it is a spring, then there's still a possibility that it could turn out to be a bullish case similar to 2015 and 16. Okay, so I also present you the analog a few weeks ago. So 2008 is another analog, which is the bear analog, and 2005, 06 is the bull analog. Okay. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.